$200 to buy the cash machine strategy. Well, let's buy it and give it a try. Hi and welcome back to Trading Strategy Testing channel, where we learn and test your trading strategies. Last week, I was answering the comments that you guys have left on our YouTube channel and going through those that YouTube is categorized as spam. I saw a comment left by an obviously fake account with a link to a Telegram group. The person or the robot who left the comment mentioned that they are sharing a holy grail technique called the trading cash machine strategy. It guarantees you the ultimate success in all of your trades, whether in Forex, stocks, gold, or even trading options. I was extremely curious as usual and decided to join their Telegram group. After a few words with the admin, he told me that the strategy costs $200. He was extremely confident about it to the extent of offering it for $50 and asking me to pay him the remaining $150 later after withdrawing my earnings. Well, as usual, I will reveal and test the strategy 100 times to see how successful it is. If this is your first time here, consider subscribing to our channel and give us a thumbs up to help the channel grow and encourage us to make more content in the future. Let's get started. Today, we will be testing a new Forex trading strategy. It could be used for the intraday swing trading as well as scalping. The strategy looks simple and could be used by many of us. As usual, we will start off by explaining the setup and go through some examples, then test it 100 times with a $100 account. At the end, we will share the final results and provide some recommendations on how to improve the strategy and make it more profitable. The so-called cash machine strategy relies on a certain indicator called Parabolic SAR, which is a popular indicator that is mainly used by traders to determine the future shorter momentum of a given instrument. I remember receiving many requests asking us to test this indicator in the past. Feel free to suggest your strategies in the comments section to allow us to make a video testing the strategy sometime soon. The Parabolic SAR places points on a chart and indicates potential reversals in price direction. We should consider buying when the dots are below the price. On the other hand, the dots above the candles indicate a sell signal. According to the strategy, the best time to enter the market is when the shift happens. The Parabolic SAR works best in a trending market and could provide some false signals when the market is consolidating. For that reason, the moving average crossover strategy is included in the setup. Before we move on to the second indicator, the Parabolic SAR is used with its default setup as shown on the screen. Always make sure that your technical indicators are correctly added to the chart, as you might get a false signal if the indicator settings are not compatible with the type of instrument or asset you are trading. If you are not a big fan of indicators, you can check out our video series where we made various real market trades without indicators but relied on other key elements instead. We should adjust the indicator according to the settings you see on the screen. I am using a dark screen, so I spent some time adjusting the colors to make them look clearer. Make sure to add the 200 period moving average separately, as we will also need it in this trading strategy. Let's discuss the strategy now. The setup is pretty simple. When the price is above the 200 moving average, we will only look for buy opportunities. When the 10 period exponential moving average crosses above the 25 EMA, we go long if the Parabolic SAR is below the current price. The entry will be at the opening of the following candle. The 200 moving average can be used as a stop-loss level, and we can aim for a 1 to 1.3 risk-to-reward ratio. Well, as we can see, that was a successful trade. Before we begin backtesting this strategy, let's look at a sales setup. We should only consider going short when the price is below the 200 moving average. Well, as soon as the 10 period exponential moving average crosses below the 25 EMA, the entry should be at the opening of the following candle, provided that the Parabolic SAR is above the current price level. That was another successful trade. Feel free to pause the video to review the two setups again. You can also leave your questions in the comment section if you have any doubts. We can see here that the price is above the 200 moving average. We should only consider buy entries. The 10-period moving average has just crossed above the 25 EMA. This is a buy signal, but we need to also make sure that the price is above the Parabolic SAR. It's the case here, so we go immediately long at the opening of the following candle and aim for a 1 to 1.3 risk-to-reward ratio. By the way, I forgot to mention that this strategy is supposed to work on the 5-minute chart. I am not sure about the other time frames at the moment, so I will simply stick to the strategy we have today. As we can see, that's another successful trade. Before we begin backtesting, let's look at a sale real market example. We need 3 conditions to enter the market. The price has to be below the 200 moving average as well as the Parabolic SAR line. We go short as soon as the 10-period EMA crosses below the 25 EMA line. The indicator would print a sale signal on the chart. All the conditions are met here, so we go immediately short and aim for a 1 to 1.3 risk-to-reward ratio. This is obviously a trend-following strategy. I think a flexible take-profit level might help us make more money, but let's stick to the proposed setup for now. Well, it's another successful trade. Let's begin backtesting this trading strategy. To save time, I will fast-forward the video. Many of our subscribers asked us to use a small account when testing trading strategies. So I am using $100 as our trading balance and a fixed volume of 1 micro lot. Don't forget the thumbs up if you enjoy our content. It helps a lot with the YouTube algorithm, and you can also subscribe to the channel if it's your first time here. Awesome! We have just finished backtesting this strategy. To be honest with you, it was a time-consuming process as the entry signals were pretty small and difficult to spot. Well, these were the results. After taking 100 trades using this scalping strategy, we have made a profit of $2.29. Well, let's not forget that we are trading with a small account of $100 while using the smallest volume size possible. The drawdown is around 8.5%. It's a bit high in my opinion, and we recorded 6 consecutive losing trades. On the other hand, let's not forget that we were aiming for a risk-to-reward ratio of 1 to 1.3, and yet the success rate is 49%, which is a positive thing. By the way, these results were recorded over a period of 5 months. Well, let's face it, $2 in 5 months remind me of those websites we used to have in the past where you need to watch ads and click on stuff to make 1 or 2 cents. But I think there is hope in making this strategy more successful. No need to reinvent the wheel. Maybe a small change like opting for a higher risk-to-reward ratio would help. So I decided to backtest the strategy again with a higher risk-to-reward ratio. To make things easier, I will just double up the number of pips we will be aiming to get. Instead of 1 to 1.3, we will opt for a 1 to 2.6 risk-to-reward ratio. The good news is that we don't have to look for entry signals again. All we need to do is update the take-profit level for the trades we have already made and see how it turns out. You can always share your strategies with us in the comment section or simply submit them at 3wtsdlife.com/submit. Alright, we have just completed updating the risk-to-reward ratio for all the 100 trades we placed before, and these are the results. The first thing we notice is the success rate, which increased from 49 to 51%. 1 to 2.6 risk-to-reward ratio seems to be more suitable for this strategy. We have made a profit of $40 over 5 months. That's 8% monthly growth, one of the highest we have ever recorded on this channel. The high number of consecutive losing trades does not seem to be a problem anymore. At the moment, all we can see is a strategy with a very good potential to be a winner. But before investing our own money, it's important to define the Forex pairs that work best with this trading setup. The most popular way to make money from Forex trading is to exploit strong trends. However, your favorite currency pair will not always deliver the persistent moves you're looking for. So, do I recommend you to trade the market using this trading strategy? Well, yes and no. It is definitely an interesting strategy and the numbers are quite supportive. However, we still need to test this setup in real market conditions before we use it to trade our hard-earned money. Let me know if you are interested in making a trading robot based on this strategy. We can share it for absolutely free if it's profitable in the short and long run. All you can do now is hit that thumbs up or down button and subscribe to the channel if you enjoyed this type of content. Happy trading!